Now let's get to deal with Newsfile this morning as far as the major issue is concerned. And as you know, last week we dedicated the entire program to dealing with the Agyapa mineral royalties question. This morning we are privileged to have the Finance Minister, Ken Ofori Atta, to join us, help us understand who Agyapa is and who Agyapa is not. Is Agyapa withdrawn, suspended? Why? Right. We will do a second segment where Dr. Tony Obing, founder and president of Africa Institute of Extractive Industries, AIEI, will join us. Dr. Theo Champong, economist and political risk analyst, Aduji Kujo Tamaklo, lawyer and member NDC, National Communications and Legal Team, and Dr. Steve Mante, our chairman, Alliance of CSOs, working on extractive anti-corruption and good governance. So it is yet another round on the Agyapa deal. Mr. Ofori Atta, thank you very much for making the time to join us on Newsfile.
Thank you, Samson. It's good to be back here.
Great to see you.
Appreciate the opportunity.
Right. Great. Okay, so there's been a lot of talk, and as you know, we have spent almost 2 weeks talking about Agyapa. Yeah. So a number of issues have come up. As you know, about 15 CSOs have said a number of things that you were not pleased with. Some of the comments that they made, and then we have had other experts also write articles to try and suggest that you are heading the wrong way and that you need to pause and redirect how you are going. Yeah. First, how do you answer to the questions of lack of disclosure, lack of engagement, lack of consultation with the people of Ghana, because we are dealing with mineral royalties. Right. These are minerals that are entrusted in the president, and the president holds them in a trust position for and on behalf of the people of Ghana.
Thank you very much. I think it's really been an unfortunate situation in terms of what has transpired, but we all learn from that, and it actually inures to the spiritedness of our democracy, which we have to. The question always in all of these is a question of balance, and therefore really relevant questions of transparency and valuation and conflicts of interest, I think are things that should be put out there for us to discuss. The question is really ensuring that it does not lead to a situation where we torpedo something that may invariably be good for the Republic. So that's how I see it, and I did meet with the CSOs, right? And I think we had a pretty frank and open, and I pray that they realize that there was no ill motive in whatever we have done. I think fundamentally, Samson, the questions they asked, I suspect that there's a lot more information out there and people know. This has been, in effect, I would say a 4-year process. I say 4 years because NDC had 2010 and 2011 in which they examined this model or paradigm. And then we, since 2018, have been talking to Parliament about it and in discussion forms. So I don't think anybody can pretend that it has not been in the public. And Parliament, of course, represent 275 constituencies of all of the nation. So yes, we've done that. I think the other backdrop, and maybe that was what our blind side was, is that Samson, this is the first government that has actually signed a memorandum of understanding with the unions and employers, especially when we're getting out of the IMF and saying that, we need that engagement so that there's irreversibility in our decisions. And then we went on to also sign a memorandum of understanding with the faith-based organizations, and we saw the relevance of it during the COVID in terms of our sociology of supplying food to make sure it gets there. So really, for us, I think the next move is to have such an understanding of the CSOs so that we take out the bile from whatever we have. So yes, there's always space to facilitate this dialogue and maybe engage more people, and we endeavor to do that. But I think the fundamental question of whether this company, quote unquote, is transparent and is therefore owned by government is very clear from the Minerals Income and Investment Act, that yes, it's 100% owned by government. Further on, the registration of Agyapa in Jersey is also 100% owned by MIV until such time as we go for the listing. So whether they are beneficial interests, etc., I think that can be really put to bed, and we should all be clear about that level of transparency. Then I guess the issue become the purpose of it, but the purpose.
So we'll get to the purpose. Yeah. The question of transparency, if we can exhaust it a bit, and consultation. Yeah. So you make us understand, and the CSOs are happy that you gave them the opportunity to meet with you and to get some further and better particulars about this deal. And I'm sure we have heard some of them who made some comments earlier, now refining some of the comments that they had to make with the benefit of the information that you gave them. But, for example, if it's been almost a 4-year project,
right,
and you came in and started it in 2018.
That's correct.
The question is, how do you justify, if there is no justify what appears to be the secrecy in the manner it's been handled? And here is what I mean. The parliamentarians, the opposition, complain that they had only 4 hours, barely 4 hours, to examine 4 major agreements and 3 other documents regarding this. A total of 7 different, transactional documents. Without sufficient time, they were not giving the things they asked for. How do you explain that?
It does baffle me because the principle, at least for me, what I work with when there is a transaction of some sort, it's really to dig deeper than what purportedly has been done. I'm not sure what we did not give parliamentarians through the Finance Committee in the various meetings that we had. What I don't know is I don't know the final price, so I can't give that. I don't know what else is a mystery, really, when we talk about this transaction.
They say that, for example, they wanted to be able to investigate into the background of this particular entity. They were not giving any details about the entity.
Samson, this is just a phone call.
Okay.
And the way in which, because of AML, CFT issues, the way in which responses are done. To find out what MIF is about is Ghana Registrar General's Department. To find out details of a company incorporated in Jersey, it's really a phone call away. So we can make, a meal out of this and create this sense of lack of information. But truly, I think we need to get to the substantive part of this.
Yes, but this has become such a major aspect of the discussion. And I think that the more information we have and explanation we have from you about it, it will help the process going forward, whether what they are saying is true. So they say that they are representatives of the people in Parliament, and they have an oversight role, which is very critical. And you are saying or suggesting here that they should be finding out from the Registrar General. They needed the prospectus, they said they needed projected cash flows, underlying assumptions, and the dividend policy. Yeah. The members of Parliament you wanted to pass to study and approve of 4 major agreements: the investment agreement, the relationship agreement, the management agreement, and the assignment agreement, together with 3 other, processes. Yeah. You should be handing them that information.
Right. Samson, when we talk about, let's say, dividend policy, for example, and when you are going to market, forward making statements are difficult to make because of the impact of what you are going to do. As to whether we provided a sense of what this company is about, the clarity of the mineral royalties that will come to this entity, I think that was provided, okay, because that really is pretty much public. So once you have that, you know what it is of the countries that we are ceding away. And then it comes to the issue of valuation. Which valuation, also you price at the point of which you've done the roadshow and you're about
giving
to
up to, as they say, 3 years. And you're talking about assigning for, as it were, in perpetuity. And they say they were giving only 3 years of cash flow. And that's not sufficient enough to assess them to make, take a good oversight responsibility for the people.
Samson, what do you have? And there's fact and there's truth, right. Okay? And I think we need to be clear about that. So in terms of historicals as to what the value of our royalties are and projections, I guess in a sense 3 years will give you the most insight into everything else is a projection. So once you have the 3 years, you have a clear view of what is going. But the issue going forward with these transactions of valuation is that in the end, you are going to do this as a multiple of the net asset value compared to what else is on the market. And that's what happens. In the same way in which I go to Parliament, I ask for their forbearance and they give me approval to go and get $3 billion. Now, as to whether it's going to be 41 years, it's going to be 6.875%, etc., I can't even begin to do that. And that's $3 billion, okay? So we are looking at an issue of 500 million, for example, if we wanted to just do nominal. So the fact of the matter is that, yes, there was a 3-year cash flow in which we understood. Everything else is projection. Dividend policy, you can't declare, except that when you look at comparables, you know that they typically do 30%. So it's not a question of mischief or trying to keep information away from Parliament. So you cure that and you move. So what are we trying to do for the nation? And we move on that. So I really believe the 3-year cash flow captured the essence of what, quote unquote, the country was using and to capitalize this company and create value for it. Dividend policy, you can't quite, except to assume that it will be between the 30% range as others do royalty companies on the market.
It is also suggested that the Attorney General only lately was brought into the whole picture, and now she began to now offer advice and give advice 4 different occasions, which advice, at each point, she kept insisting that certain things ought to be done and done right. So the question is, even the Attorney General, the state's principal lawyer, cannot be said to have been part of the process for the 2-year period. Why that development, if that is true, from the facts as you know them?
Yeah, and that it makes me very nervous when we talk about that, because really, with all of these, so even with bills and acts that we go to Parliament with, we have a retreat, we go through things, they say no, we change. So that dialogue to be interpreted as the AG not being part of it, you know, it's palpably wrong. You know, the AG is supposed to interrogate anything you bring, and she may have a different view. You discuss it, and then she understands where, how far she wants you to go, and with the Republic as a preeminent reason why she does things. So that dialogue cannot be misconstrued as AG not participating.
In respect of that, the Imani asked a question. Yeah. How was Cabinet able to approve a deal in March 2020 when as late as May 28th, 2020, the Attorney General was complaining of not having seen the 4 main agreements involved in the transaction besides the relationship agreement? What exactly was presented to Cabinet to review and approve? That's a legitimate question.
Oh, it can be. You know, Cabinet has, like, you know, quite a number of processes and hurdles that we go through. What we discuss with the economic management team, what then goes to the Cabinet subcommittee on economic planning and finance, that we go through, what comes to Cabinet, and then what the President also does. Because in the end, Cabinet is an advisor to the President. So all of those things, you know, were done, and therefore it's quite an unclear view of the processes we go through. I think once you begin to put cynicism aside, you know, things that we do will not be colored the way in which they are colored. Because fundamentally now, after, I guess, 2-3 weeks, there's a sense that, oh, okay, so it's an issue of you should have consulted the CSOs or other people a little bit more. And you have committed that you are going to do that now, having started the first meeting with the CSOs, and you're even going to involve the chiefs. Yeah, we will, you know, okay. and as you know, the issue of the development fund, which is 20% of royalties, I mean, it's not been touched at all. So that aspect of our national policy orientation was not at all tampered with. Okay. So would you agree that, with the benefit of hindsight, the approach ought to have been different, ought to have been sort of a bottom-up? That's not what appears to have happened? Yeah, I'm not sure. You know, and I did start with these historic partnership agreements with union and employers and with faith-based organizations. So yes, I think the issue of continual dialogue is important. You have to bring people along with you. I remember, I think sixth form, one of our literature books was Coriolanus, one of Shakespeare's. Right. And his tragic flaw was in not listening enough. Okay. So it's good. I mean, our nature, the Ministry of Finance, through these 45 months or so. So finally, on that point, what's going to be the nature of the engagement? I think we'll get a little bit more literature out. You know, that will be public and website publications. Seek audience with the Council of State, with the House, Regional National House of Chiefs. You know, really let people know that this is part of a plan in terms of strengthening our financial services sector in this country. We can talk about the valuation question, which is a big issue now. That you're giving away, you're shortchanging the country by what you're doing, because we could get even more by giving less. That's the suggestion that you have had groups like Imani. You have also had Kofi Ansah and Fuichi Kata, who have been in this industry for quite a while, also seem to suggest. But before that, you had mentioned that we started this long ago,
and that the NDC examined this model or paradigm. Those are your words. Did they exactly examine this model or paradigm?
I think really what I'm saying is that it shouldn't be a transaction that is unknown. Okay, you know, I think they went as far as, and then the Attorney General said that the corporate structure they were doing could not be done. I don't know why they abandoned it, but NDC does abandon a lot of things.
Right, but they had not intended to, as it were, give off some of the shares to anybody. It was going to be 100% Ghanaian owned.
Great.
This is not going to be 100% Ghanaian owned. 49% will go away.
Up to 49%.
Right.
Up to 49%.
Up to 49.
So something, you know, we've never apologized that we are a center-right party. It's never been and they're a social democratic party. So that's it. So if there's a principal disagreement in that, that's okay. You know, but we believe that that yields a lot more results for the country than something. You know, since the 15th century, we've been trading in gold to the Portuguese. They come, they put the beads and the alcohol in front, they go to their ships, and then we bring our gold and silver and they take it away. Continually, dealing in the physical. We have continued to that. You can see where we are with gold, okay? So the question, and then right now in the international markets, 500 times of trading over the physicals, okay? And the value add is there. You ask yourself, you know, how long are we going to remain in the 15th century? Continually, for us to be the largest producer in gold in Africa and see where the world is going with regards to the need for resources and say, let's play with the same model. You know, you can always question about going to the stock market, etc., because you believe differently. But that's okay.
Okay, so let's get to the valuation, because obviously, as we have known over the period now, if the NDC suggested, even remotely, that they were in principle against monetizing or securitizing our mineral royalties, then they would be wrong. Because the history you just referred to in 2010 and 2011 is there, that there was that plan. And then when the main law itself, the Minerals Income Investment Fund Act, was being passed, there was no opposition. We have no record of opposition by the minority as regards Section 3, which gives the MIF the power to set up a special purpose vehicle with very clear terms. And if I may just refer to that, so that...
I mean, the issue is, I mean, Section 2, 3, and 4 clearly enable you to do foreign exchange, foreign transactions, and
so
SPV.
Section 3 is what I was referring to, that Parliament collectively gave power to the fund to create and hold equity interest in a special purpose vehicle in any jurisdiction in furtherance of its object, and the special purpose vehicle shall be free to operate as a regular commercial company. They gave it power to procure the listing of the special purpose vehicle on any reputable stock exchange that it considers appropriate. They gave it power to assign or transfer all or any of its rights to minerals income to a special purpose vehicle in furtherance of the objects of the fund, including through allocation of agreements and stability agreements, so to speak. So, I mean, we know that in principle they cannot say that they're against it. But now let's get to the questioning of the value and the fact that we could get far more giving less.
Okay. I have listened, and I am asking, how do they know the value that we are going to get for the entity? When I'm going for a bond transaction, we don't know what interest rates we are going to get or the maturity, okay? except we do the roadshow and then we strike a price at the same time, at a certain moment in time. In the same way, you go to the stock market to do an IPO, you don't know the value until we strike the price pre-listing. Okay, so this is what's going to happen, Samson. This is an IPO. Is a company that is just in operation, and so you have to build a balance sheet. Okay, so you take your international auditors, and they create a balance sheet for you, looking at the royalty cash flows that would come and build it up. But it's very conservative because you are just really trying to create a book value so that the company has a balance sheet. But that in no way reflects the valuation that you are going to have. In the end, when we go to market something, I'm going to look at something called a net asset value. Okay, and when we look at the market right now, it's anywhere from 0.6 times NAV to about 3.2 times NAV for Franco-Nevada and Co. Okay, and so it is through the process of the IPO, the roadshow, that we then will strike the price. Have we ever gone to the market and not come back with a better price? I think we have proven that we do. So I think it's all part, of the speculation that what was represented as book value is a valuation that we are going to have for the company. And if we look at Ashanti, for example, the purported book value was, I think, $480 or so, or $460 million in 1993, and we went to the market at $1.8 billion. So once we put that explanation aside, I mean, this is not a government.
So I've just gone to clause 4 of the amended agreement. So you're asking where this figure is coming from as the value. And clause 4 of the amended agreement says, it's titled Value of Rights Assigned to Royalty Co.
That's correct.
Subject to the satisfaction of the conditions set out in clause 2.1, effective date, Royalty Co. shall acquire from the fund, and the fund shall assign to Royalty Co. the rights granted to Royalty Co. under its agreement, including, for the avoidance of doubt, the allocated mineral royalties to be received by Royalty Co. in accordance with clause 3.1a, allocated mineral royalties obligation above, for the value of $1 billion US.
Yeah.
So
what does that got to do with the IPO value? That's the question I'm asking. Something, if you went to the Registrar General today to start a Joy FM, you say, oh, okay, this is my stated capital based on what I think. Now, if you come to Ken and say, Ken, do you want to participate in this? It's not that stated value that you are going to use. We're going to negotiate to see the type of work you're going to do, what the cash flows are, etc. So I guess not to sort of extend the argument, but to assure Ghanaians and them that is not the basis for valuation in which we will get our IPO price. It's very different. And I just wanted to use the Ashanti as an example for that. So we have a history, in that area, and we'll strike the appropriate price. And Samson, this is, I guess, the best showing of gold in the world that we've ever seen. Okay, so even that throws in an incredible variable in which we cannot, as a nation, sit and let this moment pass by.
So these group of experts and CSOs leveraging on what they know, you suggest that are engaged in speculation on the basis of facts that don't exist, in relying on clause 4 of the amended agreement, as I have just referred to. Number one.
No, I mean, no, I don't want to really get into...
Kofi Ansan,
I respect all of them.
They say this when they wrote. They say that if we were to assume that gold prices will drop from the current 1900 plus an ounce to, let's say, 1,500 for the period 2020 to 2023. On current production projections, the royalty revenues from just the 11 existing producing mines for those 4 years that will be transferred to the Agyapa companies under this transaction would in 2020 money be more than 1 billion. This does not include future royalties from the mines coming upstream eminently, such as those at Obuasi and the highly promising Nandini mine near Bogatanga, nor does it include post-2023 projected production of the 11 mines. They're talking about valuation. Imani talks about the same valuation and says we have undervalued by as much as, is it 60, 50%?
So you come back to, you have undervalued. So what is the base? The base is the 1 billion. I've explained what the 1 billion represent, which is different from the valuation I'll go to the IPO market with. So at that juncture, you know, what are we saying? Now the question as to whether your future flows, etc., the beauty of the capital markets is that, you know, as more flows come in, your market capitalization changes. You know, you look at a Franklin Nevada, for example, started with $2 million or so, and it's now a $36 billion company. And therefore, your, what, 51 or 60%, as it may be, you know, also rises. So it's a fundamental belief, in a sense, in whether the market will capture at any point in time all of this information over the period. And we believe is that something, you look at a situation in which we have been doing this physical for the past, what, 4 centuries or something. And we are saying that the game that is played is in the market. And why do we not capture some of that? The same premise in which we moved Ashanti out to make sure that you can attract capital. And when you look at where we are going as a nation, and you have this gap between our savings and our investment needs, we need to extend beyond bond transactions into now getting a new set of investors who are equity players. You know, now the corollary accumulation of benefits that will come in terms of our stature as the largest gold producers in Africa, what we are doing, even dovetailing it with AFCFTA, you know, it's a bigger vision than that. And in the end, we are talking about 2% of our revenues. This is what this fight is about. But it's not the amount that's important, but the principles must be there. And so the assurance that is transparent, the assurance that we will strike the best price that we can get in the world for it. And that, I think, you have to leave to us. So I accept all of that, and it will help us with our negotiation.
But if you may perhaps say, for the last time, give me my self-sufficient clarity on this question.
Okay.
Because Clause 4 of the amended agreement talks about value of rights assigned to Royalty Co.
Yep.
Value of rights assigned to them. And it puts that at $1 billion US.
Okay.
In fact, it put into bracket the royalty value and quotes. So if Ansa and Co. and the rest of them suggest that, they say, for example, that it is hard to see the basis on which these rights have been valued at US 1 billion, as the agreement clearly states. Who is missing what about what the value, the valuation is? There's been a valuation of the royalty.
Okay. So there are two, and I tried to state that there are two, in a sense, valuations for the balance sheet to be able to get the assignment from MEF to Agyapa. And then there's a valuation that will go to the market that you and I do not know, nor they know. So the question for them is that, does this nominal value that has been put there as representing what MEF has given to Agyapa wrong, and is it going to cause a certain amount of jeopardy to the listing and the valuation of the listing? And I'm saying no. It will not, because the pricing going to the market is on very different terms than what this is. Do I create a book value essence that is done with IFRS and international auditors? Yes, we have. We've done that. And do we use different maturities because the mine lives are different? Do we use different discounting rates? That also can be done, you know. So with regards to that, I'm like, okay, you know, this is what we believe to be right.
So I suppose that what brings this confusion or misunderstanding, maybe one genuine reason you would want to hesitate and pause, because we are talking about evaluation of the royalty.
But Samson,
wait,
no.
Respectfully.
Okay.
We're talking about evaluation of the royalty, and you say we will get to know the value, and that this is nominal. And you had actually, you know, began by saying that we can't possibly know the value before the IPO happens. Now, are we not talking about, like you mentioned, two different things?
Yeah.
Price is different from value. And what value you put on the royalty will affect the determination of the price on the market.
That's not necessarily true.
Okay, help me.
That's not necessarily. So let's say I have a software company, you know, and I go into, so the auditors will say, well, so what are you bringing to the table? Okay, and you have a few equipment, etc., etc., and so that ends up being $1,000. Okay, then I go to the market, and the market determines that these ideas that I have are 100 times multiple of that value. So I'm trying to really make a distinction between presuming, you know, that stated capital or value that is put to create a balance sheet is what it is you go to the market for, and that it is somehow linked in a way in which you then compromise the valuation that we are going to have. And I think that really is a
there must be an empirical basis for that. And the question that is being asked is, how did we arrive at this value?
And that is what
the suggestions coming up is that even if we relied on the 11 mines, you know, the projected production will show that we should have far more. So that's the concern, really. And
you know, I mean, we don't do these things, you know, of the cuff in terms of determining the fair value, as we say, of the financial asset. And so I will have to interrogate, so how many ounces really did they use? And what are the different mine lives that we are talking about? You know, some 4 to 15, etc., etc. I could even add that in future, because we are going to be buying royalties of other companies, that also could be factored in to see what you get. Then on an accounting basis, the discount rates have an effect on it, okay? So you do something like 7.5% for the operating mines, you do about 10% for the operating mines, and I think they struck a balance of about 8.1% to do that. But for the market valuation, a discount as high as 5% and could be used. And this was all done with IFRS and the auditing firms to really come to something that then is acceptable and for us to go. But the issue that I really want to stress is that this is not going to compromise the way in which we strike the value for at IPO. In the same way in which Ashanti might have been determined at 480 million, and we went at 1.8 million. So we have a history, and therefore a comfort to know that yes, we accept that there can be different ways in which one comes to evaluation for the fair market value for the books, and a very different way in which the pricing will be done for going to market.
Okay. Now, I'll read this question from Imani for you, and it's around this issue, and there's a reason I'm staying on this, so that by the time we are done, you would have with sufficient, flourish and clarity, giving us the opportunity, perhaps not to raise that question anymore.
Great.
So they asked the question that the deputy minister, your deputy makes a certain point, and his experience is being touted, but to the main question that this is kind of a unique, local invention. And they are asking, have you heard of the Kama mine deal in Burkina Faso involving Sandstorm Gold and Franco Nevada? Are you aware that $100 million was paid up front? $100 million paid up front for 100,000 ounces of gold to be delivered over 5 years. Now, when you look at these numbers, could you understand the need to perhaps take a relook at this? They are saying that JP Morgan right, I'll take this again. There's a portion I thought I could take away, but he says, okay, so when you look at these numbers, do you understand why one does not need an investment banking certificate from JP Morgan to know that collecting $500 million for roughly 50% of nearly 5% of nearly 5 million ounces of gold per year for an indefinite period of time is a steal for investors? That it demonstrates how we are undervaluing our assets by at least 50%. Did you also examine the Shanta silverback deal in Tanzania?
Something it's really difficult to get involved in sort of things that get personalized, and that is hard. The question and motive of intentionality to rip the country of its asset, that one is deeply painful. We have fortunately done this before with Ashanti, where we know that this fair value in the books is very different from what we will get when we get to the market. And would we strike the best bargain for the country? Of course we will strike the best bargain. Okay? When you decide on a certain mode of a transaction, are there certain decisions you make because there are other ancillary benefits that will come to that? We are clear on what the stock market will do as we move from debt into equity. So those all come to make our judgment. But I guess the commitment and pledge, really, for us taking the oath, is that we will strike the best deal that can get. Do we believe in this action of participating in the capital markets so that we diversify our sources of wealth generation for the country? We should, and we are committed to that. Would we engage with people to make sure there's more understanding of this transaction? That also we will do it. But as we go to list our company on the London Stock Exchange and the Ghana Stock Exchange, the investors will both be Ghanaian and foreigners, and it brings a new vista to where we are as a people.
Okay, so I ask this,
you've
and then we can leave that matter at this point. Okay. Answer and Co say that what the government reportedly expects to get from the sale of shares in the Jersey company is $5 million at an average gold price of $1,800 an ounce. The government would get more than $400 million in 2021 if it kept its rights to receive all the royalties from the 11 producing mines. There is no reason why, in order to get $500 million now, we should rush into this transaction at the risk of losing substantial future income.
Yeah, I think, I read that, and you know, even as you take majority shares in Agyapa, it means that half of those royalties will be coming to you anyway. So that had to have been put into that case. Now, the question of what you do with an immediate 500 million or more, I mean, we are going to, float up to 49% of that. We have a valuation that we are yet to strike. Where would 500 million be? It could be 20%, it could be 25%, it could be 49%. We don't know. So we can't even begin to say, this is what you get and I'm comparing it to that. Then you ask the question that, you know, are we going to continue using gold or royalties in the consolidated fund as we have done all the time? And what is new? You know, and I'm saying that this asset is traded 500 times more than we do the physical, giving us the potential for capital appreciation, the potential to invite new investors into our territory, the potential to stamp Ghana as the gold haven on the world. And so all of those, as we emerge from where we are into a transformed society, requires that we think differently. We can't continue doing things the same old way and to be timid about the future that beckons us.
I think people have come to appreciate that this is, if you like, a smart way of using our money, royalty money, which is there, in a way where you put it into a vehicle in the manner we are doing in equity transaction, and you have a 51% shares. So as the entity makes profit, invests, you get to benefit. The money is not just sitting there like it is said, it is dumped into the consolidated fund and it vanishes. And we cannot even point to specific projects that we are doing with money from our minerals. We will get to that point where you will demonstrate to us specifically what are the projects that we intend to commit this kinds of money to.
Very well.
But can we answer the question, why can we not do this without recourse to a tax haven? The answer has been that you don't want tax to be taxed because royalty is tax. But the question has been asked. The law itself in section 35 says this is not subject to tax, meaning we could have done it here in Ghana without going to Jersey and wherever.
Great, thank you very much. I mean, the fundamental question then becomes, what is wrong with Jersey? And then you say, how are you maximizing this decision that you want to make? So Jersey is part of the United Kingdom, okay, in which they have determined that in giving certain tax forbearances, it enables companies to be listed, to come there and also list on the London Stock Exchange. So in terms of transparency and an ability to see what they are doing, that is not something that we worry about. Registering the company in Jersey, enabling us for the investor to feel comfortable with the jurisdiction and therefore invest, it's important. So you look at all of the various companies like Wheaton, Franco-Nevada, etc., even the Norwegian fund listed in Luxembourg and the Cayman Islands, etc., so that they take advantage of investor comfort to do that. So you ask yourself, what is it that we are being so much more Catholic than the Pope? When we look at international transactions and the best way to get value, and it is not illegal, you say, well,
So that should have been the original government's response to the question, why go to Jersey, a tax haven, and as we know, and like your deputy will say, tax havens are reputed for dodgy activities. Rather than pointing us to Section 35 of the law, which says the minimum income paid to the fund and the dividend payable by the fund or a special purpose vehicle are not taxable, which meant we could easily do it here and we will not have been taxed. Okay. So to suggest that we went to Jersey so that we will not attract tax upon the tax money was not the right answer to have given to have been given to us in the first place, correct?
Well, maybe that's why I'm here.
Okay.
But really to demystify, these things, understand that the peer companies do likewise, is the way in which investor comfort is assumed, and we take advantage. Something, I guess my constant dilemma as I sit in this chair is, how do I get the best value for the Republic?
Right.
And as we verge into this idea of Ghana becoming an international financial services center, what are the pillars that I need to begin to put in place to ensure that this is realized, that the new El Dorado comes into play? But the assurance that we'll get the best value, it will be transparent. I mean, once this company is public, the issue of governance and reporting is just so internationally clear that nobody can perceive that something untoward will be going on.
Yeah, and there's, in relation to this question, the question is being asked, in seeking to do it in the manner we are doing it, there's a suggestion that is why we are giving up so much control when we could have retained control in the relationship. And the question that is being asked is that there is also the opportunity for sovereign-controlled commercial companies to have an option to list on the London Stock Exchange and to keep the state control without losing it. So why have we left all these options? And you would see that when you went to Cabinet, I mean yourself, when you went to Cabinet to seek approval for the amendments that had to be introduced in 2020 this year, you wanted to take away the other controls that the Financial Act and then the SIGA, the state-owned companies, have over such a venture.
Yeah, I think the issue, in all things is control and value, and whether in our judgment, giving up 1% share or giving up a certain clause would inure to the benefit of the company in the long run. And we are confident that that is the way to go. And so that really is a judgment call of value and the future flexibility of the entity. And I think we are comfortable with those changes that we have made. I think it's quite, after a certain point, to be able to look at the margins of the transaction and say, well, I'll go this way, you will go that way. That's fine. but in terms of whether in total we believe that the package that we are putting together will serve the Republic much better. I think that's where we are at.
But don't you think in that process of divesting so much control, it feeds into the suspicions that the CSOs and others have had? When you went to seek approval, basically what you were doing was to limit the application of the controlling legislation by removing the rigorous controls by way of financial accountability, because if you had not done that amendment, there was supposed to be some financial accountability to the state directly, and good governance checks, which the state enterprises body was supposed to oversee, financial reporting and openness to the government. You sought to remove, the compulsion to make disclosures, including the remuneration of top management. You sought also to remove the criminal liability for non-compliance with the PMF Act and then the SIGA Act, which could have seen, officers or directors of the company suffer as much as 6 to 2 years in prison if they didn't do the things that the minister required them to do, among others. So people feel all these controls that you have taken away, which the state would have had, feeds to the suspicions that the CSOs raise.
Yeah. And what is the suspicion? And I have also a certain clarity on the governance standards of the London Stock Exchange, which has enabled these companies to rise from 2 million to 38 billion. I also have that. And I'm evaluating that with whether really I'm losing so much by removing those. And I feel that the tenets that these companies operate on, the LSC, etc., will give us enough protection. And also having the chair and the type of board members that we'll have will do that.
These controls and monitoring that the Boateng's authority, that the State Interest and Governance Accountability Authority would have had, including monitoring the processes and actually direct reporting of their finances to you as the finance minister, are seen to be a better way of accountability. And we have taken it away.
Yeah, but I mean, once we also make laws thinking of state enterprises being 100% owned, it gives certain restrictions. Am I compromising our ability to be able to get the type of reporting that we need? No, we are not. And I assure the people of Ghana that we'll get all the information we need to be able to make our decisions and also get the type of value we require and the reason for going to the market.
Okay, so you sought this approach by informing Cabinet that there was an urgent need to get money into for development. What are we looking at in terms of development through this vehicle?
Yeah, Samson, what we are envisioning is that we're going to create the largest sort of royalty company in Africa. And so we'll put about 1/5 of the money aside in the quest for acquisition of other royalties as we build up this company. And you can see how $2 million can become 38 billion in a matter of time if managed properly. And that's amazing resources for that. So we'll put that type of money away as we look for that. The second aspect is that you look at the whole value chain of gold, and Ghana does not really participate in that much. First of all, we don't even have an international standard refinery for all the gold that we have mined. And so that we need to invest in, and to make sure that once the Ghana stamp is on bullion, it is accepted internationally. The whole tourism, education, mining communities investment has not been done well. I mean, it is quite tragic when you look at Takwa and Obuasi, given the same rules, how far we have come or how far we have not come. So there will be investments in that place. How is it that, being such leaders in cocoa and gold, you cannot, you and I, Samson, name 2 or 3 millionaires in this area? Let's find a way in which there's dedicated resources so that we can support, miners in Ghana. The difference between us and South Africa, the South Africans own those places, and we have other companies doing that. That needs to be reversed, but that needs deliberateness, and these resources will help. Then, of course, when the president sent me to Parliament for the mid-year, as you know, we announced Obatampa, which is a 100 billion enterprise that we have on our books, a quarter of our GDP, of which 70% will be private sector and 30% will be that. So the issue of supporting the construction of the district hospitals, and then here the president has also said that this will be done by Ghanaian contractors, because he's thinking through this whole anemic response to housing and saying, how do we build our contractors so that from there we segue into a national mass housing construction plan? And I think that is necessary. A third element is the whole financial chassis. And so the creating of a national development bank, which will be a wholesale bank, so that we can then invest in our venture capital, in our Exim banks, in our Ghanaian banks, to build this regional hub that we have committed to. So it becomes, pushing ourselves beyond what you say, the poverty of ambition, to realize that this transformation, once God willing, the president is giving 4 more years, we take off running.
Are we not capable of listing, itemizing the specific development projects with clear timelines tied to the revenue, the money that is coming from this enterprise, so that will be your social contract? So we can hold you to it.
I think if you were to deconstruct what I just said, first 20% for royalty acquisitions, around and to build this enterprise. Second, the value chain of gold, which means that what money are you putting in to build this world-class refinery, etc., and what do we do for our indigenous communities? Third, I talked about the hospitals, and home construction, and support for the National Development Bank. So those can be spelled out for you.
The 20% that you say is already there, untouched. The 20% of the royalties, correct?
Right, that in terms of the development fund?
So it is not all the monies, royalty money that is going on. But questions are being raised as to that particular percentage. Has it in fact been available for the purposes?
The 20% development fund.
Yes.
I think it's been a bit quite not been exacting, and our expectation is that now with MIF, will be a lot more specific and transparent and accountable for that. But that specifically was not touched, to make sure that we keep it.
I'll pick a few questions for you from Twitter. Ephraim Roberts says that, kindly ask the Minister of Finance why they are hiding the prospectus of this deal and the name of shortlisted companies where Kofi was finally selected. What modus was used in the selection process?
Yeah, we use an international search firm for that, and Kofi, if you look at his CV, is of an international level in terms of the experiences he had and also what he has been able to do at SNET. So that it's always a problem when a relative or something, or somebody in high places gets a position. But whether that person should also be denied is another issue. But we are very comfortable with his competence.
That question has been asked by two different people.
I'm sure. I think the fundamental question, Samson.
I'll move on and ask this question.
Is why should the finance minister be related to the president? That can also be asked. Let's get to the heart of that, and then we'll say that was that a good call?
Right. In respect of that, if you wanted to have that question restated.
No, I want us to move on.
I get it. I get it. Because the NDC has a way of asking that question. And I don't know if you would like to respond to the way they ask that question.
I think really, the issue of transparency, the valuation, the tax haven, all of those needly things that people need to do. I pray that we have done justice to those.
Kweku Bwesiako ask, can you publish a 30-year cash flow projections based on the Agyapa model, juxtaposed side by side with our inflows from the royalties under the current arrangement over the same 30-year period? And 30 years will be the life of a mining lease. And this lasts for the life of a mining lease, and even when it is renewed. And he says, I believe this discussion is about maximizing the overall financial and socio-economic benefits that Ghana should derive from our mineral resources. It's a numbers game. So let's publish the numbers and let Ghanaians interrogate the numbers using whatever models or alternatives they have, so we can cut out the suspicions and personal attacks and rather focus on the real issues. What will you say to him?
I think that's welcome. It's nothing that we cannot or should not do. And really, in the end, after 3, 4, 5 years, it's all projections as to what you think the mine life is and what the operating companies
So do you want to do this?
Well, we can. I can go through the 12 operating mines, do your guesstimate for the 4 developing mines, and see where you are going to. The issue... And
this has been the cry, so the publication. When would you like to do this?
So we can do that. I can get my guys to start on it, So
we can expect this to be done?
Yeah, we can.
Right.
Because but the challenge, with all of us is, how do you do the valuation for where the price of this company will be on the stock market over the 30 years?
The clarion call has been pause.
Okay.
Are you going to pause?
No, we're not. I think this is a good transaction. I think that the issues that have been raised, we have put light on that. This is an incredible opportunity, the highest gold prices in the world. And it just reminds you of one of these parables in the Bible where the Lord has given us these assets, and there are 5 of us, and I'm choosing to bury it at this time of the world because of certain questions. Leadership is about, balancing this, but in the end, do I believe this is good for the Republic? I firmly do. Okay. Will it lead to where we want to go as Akufo-Addo's plan for where Ghana should be transformed? I firmly do. Have we been doing what we are doing since the 15th century? And this is where we are at. We all are clear about that. Should this continue to go into the consolidated fund and then not be able to know what we've done with it? That is not the way of the future.
Okay. Thank you very much, Mr. Minister. So I have been engaging the Finance Minister, Ken Ofori Atta, explaining who Agyapa is and who Agyapa is not. At least he's taking time to exhaust explanations on 3 of the 20 issues that have come up as far as this deal is concerned. Thank you very much.
Yeah, thank you, Samson. I think really, thank you for the platform. I think we've gotten to a point in our country where I believe Ghana is an ideal. that bucks the trend and puts the Black Star where it should be. The issue of poverty of ambition, should be cut out of that. Should the next election over national interest? Should it be polls over principle? These are thorny issues, but really as a country and where we want to go, we can't do any less than this. So I appreciate your
Thank you very much. Thank you very much. And as always, Newsfile is brought to you by Bank of Africa, strong as a group and close as a partner. MTN everywhere you go. Ashesi University, educating ethical and entrepreneurial leaders for Africa. Consolidated Bank Ghana, we stand with you. Duraplast, where Duraplast goes, water flows. We lead, we build home for you. Star Assurance, your solid partner, and Rehoboth Properties. We'll be right back with my next set of guests to continue this discussion, hoping that sufficient light has been thrown on 3 of the major issues regarding it. We'll be right back.